Needless to say, the markets have been busy, guys. Not only are we dealing with the last trading day of the month, not only did we have some major inflation-related news come out for the dollar today, but we've also got a little bit of a brouhaha between America and the Ukraine with the whole Trump situation that's going on. With that being said, we're going to hop into the charts. We're going to stay away from all of that funny stuff, and we're going to take a look at the technicals and understand the story that they are telling us. Welcome back to the show, guys. My name is AKIL'S. If you're new to the channel, thank you for joining. I am a trader. I'm also a trading coach, and this is the Trading Edge video where each and every week we come in and I share a few of the top trading ideas that are on my radar for the week ahead. Typically, I do this over the weekend where I have more time to kind of think and look at the charts and do my analysis, but because I'm hitting the road, I'm doing this on a Friday night, so you're getting a little bit of a fresh first look at a few things here. And we're going to start off with the euro dollar. And I'm going to be here on the 4-hour, and I want to take a look at how the euro dollar ended the week. Now, initially, it looks like we did a few things, and we did, right? First thing you probably noticed is a lower low, lower close right there, which would scream trend continuation to the bearish side. But I want you to pay attention to these structure wicks on the inside here as well, because this will be the next place that I expect market to go. And market did go here, or price did go there, and you can see that we indeed held those levels. So we did not break and close below this most recent level of structure. Because of that, I'm not too interested in a bearish trend continuation opportunity. Rather, it'd be interesting to see if we get some type of relief, some type of correction to start the week next week. Now, by all means, if we do break and close and create a fresh low, then boom, I think we're going to go straight down to this level right here. And there's some really cool analysis down here. There's a bunch of fib levels. There's a bunch of AB equals CD patterns, right? I can just see it on my chart right now. The harmonics are standing out to me. But we'll leave that for later in the week once it does happen. For now, I want to focus on what can I do to potentially catch some of this relief. And if we go down to the hourly chart, here's what I would be looking for. What we are currently doing right now is we are at the halfway point of what's called a head and shoulders pattern. And the head and shoulders pattern is a classic reversal pattern. It starts off with a directional move, a strong directional move. We then get a strong retracement. And by strong retracement, I mean a shallow retracement, because shallow retracements equal strength for the prevailing trend, which in this case would be bearish. We then get a tiny extension down, which is a negative case for a strong bearish trend, right? So that's where we're at right now. What we would need to complete this pattern is a move back up to here or somewhere in this level. Doesn't always have to be directly at it, but a move back up into our previous outside return right here, giving us the connecting dots for our neckline. A move back down that fails to extend and usually is somewhat symmetrical with the left shoulder. And then what validates the pattern, gives us the green light, unless you're trading it aggressively, would be a violation of that neckline. And if we can get that, I would expect price action to come right back up to these lows, the level that we previously violated. What, I think this was Thursday when we had our news come out. Yeah, Thursday morning. We're actually watching this live in the market. So keep an eye on that for the euro dollar. On the other hand, right, again, if we do break and close below this level, this was that low watermark from the higher time frame. Again, I would expect that we continue lower. So let's just walk through that scenario as well while we're here, right? Let's put a line in the sand here and say this is our new structure low. This is the level that we need to get violated. If we can violate that level, I would expect us to go lower. And if we go lower, I would expect us to come somewhere in this level, right? So I'm going to give you guys a nice big level, and we're going to see if we can kind of break this down to a more specific price point. So there's a few things that I want to do from here. Let's start off with our Fibonacci tools. What I'm going to take here is my Fibonacci retracement tool, or excuse me, my extension tool. And this is a tool that is used to make a prediction on where the market may expand to. So if we're looking for extensions where we can go next, this is the tool that I want to use. I'm going to drag it from the swing high to the swing low of this big move right here. And I'm going to see what ratios come down at that level. We have a 127, which is the first important stopping point for me. And then the 1618, which is the golden mean, right? That's kind of the main Fibonacci extension level. And you can see it's right below that zone. Now, for you guys that are new, understand that these things aren't magic, right? They're not going to be exactly on a price point, but we're looking for zones. We're looking for our different tools and our different technical clues to line up in zones as traders. I can actually do the same thing from this smaller extension too, right? So I'll take my same Fibonacci extension tool from this swing high to this swing low and back up, and you're going to see that I also have a 1618 in that zone. If we want to be even more harmonic, we can take equal measured moves. Some of you guys call these AB equals CD patterns, where I simply take the length of this swing right here, I copy and paste it and drag it on here, and you can see, boom, that's going to line up right with our bigger 1618. And if I did the small one, I have a feeling this will line up with the smaller 1618. Now, we don't actually know where this retracement is going to complete at. It's hard to see right here, but you can see actually it lines up with the lower one as well. So you can see two harmonic moves and a 1618 right at that level. So you can see we have some nice confluence down there. Now, me personally, structure trumps everything in the market for me. So I can draw fibs, I can draw harmonic moves, I can have even handle numbers. Structure is the most important indicator for me. So I always look for the lowest close. So I would be looking to take targets right at this level. Not greedy enough, right? I'm conservative, I know, make fun of me and laugh, right? But not greedy enough to shoot for a move all the way down here. I would want to get out at the upper level right here. Long weekend, right? Or well, not even the weekend yet. Long week. Sheesh. 103.34 is right here. So two ideas, right? If we get a fresh break to the downside, we can look for a continuation down to probably around 103.30s. If we do end up getting that head and shoulders and a little bit of a correction from the end of the month, the PCE, the Trump brouhaha, right? We may get a correction and come back up to this level right here, which is going to be about 104.50. So keep that on your radar for the euro dollar for this upcoming week. Next up is going to be the New Zealand dollar, the Kiwi. And the Kiwi's in a very interesting position. It's a very similar situation on the Aussie dollar as well. These pairs are very similar, but the Kiwi has a little bit of a better example in my perspective. And what we've recently done is this. We have, again, violated a previous level of structure right here. And then we actually ran down into our next level of structure support right here. And we're pretty much consolidating within that level. If we zoom in really close here, you can see what type of candles we got at that level, right? We nosedive down here. Again, that's what this week was since Thursday. And then we had a little bit of a think. We had a doji candle, which is a signal of indecision. We had another doji candle, signal of indecision. We tried the spike up, got rejected. We tried the spike down, got rejected. And now we're kind of just existing in this plane. And we can look for the same thing we did on euro dollar. There could be a head and shoulders here as well. Or we can just look for the same type of signal that a head and shoulders would give us without the head and shoulders. And what I mean is this. The powerful part of the head and shoulders is the break of the necklines, right? This may turn into a head and shoulders, right? We may have shoulder, head, right? Boom, boom, boom. We may have that. Or the market may decide, I don't want to take 1, 2, 3, 4, 5, 6 moves in order to go up to the upside. It may just do this. And we're actually seeing this on a few pairs now. It may just go up, zoop, and violate this level. If it does, that is going to be a very strong sign. One, it's going to be a sign that this level of structure has indeed held. And two, it's going to be a sign that price should continue higher. And then again, questions we should ask ourselves as traders. This is the whole think like the other trader thing. Got a cool video for you guys coming out on that at some point in the future here on the YouTube channel. But where, if we're going to continue to the bullish side, where do we think price is likely to continue next? And again, we have analysis that was already on here from previous breakdowns, right? One level is going to be right here, another level is going to be right here. So let's kind of isolate this. I don't want to delete everything, Akil. Let's isolate this a little bit more, right? Let's break down kind of this most recent leg and look at the areas where price had a think. Look at the areas where price paused, right? One obvious one is going to be right up here, right? We have a new structure low. we have an outside return, and then we have a big high momentum bearish candle that pushes to the downside, right? We can also look left here and see that there was inside structure as well. So 5680's good level. We can also see that there's a little, we call it a pregnant pause, and we were talking in the live room this week about why do we call these things pregnant pauses, and I don't really know aside from the fact that it sounds cool, but we have a nice little pregnant pause at that level, meaning that in the middle of the market just going bearish at a very, very high and aggressive rate, there was a little bit of a pullback before it continued bearish again. Well, if that was an area, if that was a price point that was important to the market before, for some odd reason, I would expect it to be important again. We can look left, structure leaves clues, and it wasn't just important this time, but you can see this long wicked rejection candle down here. It was important in the past too, right? So that's another level I would look at. And boom, right there. If you are someone that takes 2 targets on your trades, you have a target 1, you have a target 2. Like I said before, we can bring in different measurements. Last time we spoke about the Fibonacci extension tool. This time we're going to use the Fibonacci retracement tool. We can drag it from this big swing, our swing high, to our swing low and see if there's any confluence there. Boom, I got a 50% right in that level. 50% isn't technically a Fibonacci level, but it is a psychological level because us as humans like things that are halved. It's very easy to divide, and it's very cheap. If we go to the store, we buy something that's half off. I enjoy that myself as well. So that 50% is a good level as well. So look for a move here on New Zealand dollar. If, again, big if we can violate these highs, look for a little bit of relief, a little bit of a correction back up to at least this level right here. And then the secondary target would be our higher zone up around 5670s. Next up for you fans of gold out there, we saw a nice little dip in gold going hand in hand with our dollar strength, and we've come to a pretty decent level of structure. Once again, look left, structure leaves clues. We have a nice rejection zone right here, and we're getting a pretty decent signal. Now you're saying to yourself, Akil, we've had a lot of these rejection zones in the past. Right here is one as well, but I want you to look at what happened at these levels, and was there any sign that price was likely to reverse, right? We always talk about being predictive in our analysis and reactive in our execution. What that means is that we want to do our job as traders to predict levels and that we think the market is going to respond, but we want to wait until the market actually responds before we make our move. And if you look at this first level right here, yes, price action dipped into this zone, but did we ever get any sign of reversal? Well, no. We came down here, we got a doji candle, and then we got another long wicked candle to the downside, and we got an inside bar, and then another candle, right? There was no positive signal for the buyers. What we have at this lower level is, and this is called a higher high, higher close, which is one of my favorite entry techniques. It's kind of like, it's in the middle of, it's more aggressive than the one I'm going to talk about in a little bit, but not super aggressive. So it's kind of that sweet spot. It did take me years to kind of go there. I started off very conservative, and then as I got more aggressive, this was kind of the next one in line. And I've fell in love with it, but it goes hand in hand with kind of my ability to read a price chart. So 2 options here. One, if you're super aggressive, buy at market. You're going to get a heck of a risk reward, especially if you're replaying a move to the previous highs. You're looking at stop somewhere below these lows. We'll keep it right there. You're looking at a move all the way to the highs right here. That's a massive risk reward. If you're someone that's looking for more confirmation, so more clues, this is where you would wait for a double bottom, right? So this would be the first bottom right here, allow the market to retrace back up, wait for one more test. This test, it's important that it holds, and if it holds, that's going to be a classic double bottom pattern, which in itself is a good sign that price is more likely to reverse at that point than it was before. I don't want to make it seem like it's going to reverse all the time, because I know how the internet gets. It's going to do it every time. I should buy every double top and double bottom. That's not the case. I did that earlier on in my career, and it cost me a lot of money, so do not do that. But it is a positive sign of a potential hold. And it's also an entry technique as well. So something that you can use to get involved in the market. Now, if you love the markets and you want to get more involved, there's 2 things you could do. One, head over to www.tier1trading.com. That's where we have all of our educational resources and our great community of traders. 2, watch this space because we will be hosting another trading workshop the second week of March. So that's coming up soon. I promise I'll have a link for you at some point. I just don't have one right now. But when I do, I will share it on this site. I'll share it on the Trading Coach podcast. So watch this space because seats will be limited. And that's not just a gimmicky thing we say. We actually do have a ceiling for how many people we can allow in the workshop. So I promise I'll let you guys know as soon as I have more details, and I hope you guys enjoy your weekend. Until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name, all our insecurities are on. This is